Okay, so let's talk about silver. You've probably seen the crazy headlines, right? Is this thing the key to our entire green energy future? Or is it just a massive bubble that's waiting to pop? Well, we're going to get into it. Just look at this. In only a few months, silver prices went on an unbelievable roller coaster. They rocketed up from under 30 bucks an ounce, more than quadrupled, to a crazy peak of over $120, and then came crashing back down. Now, the thing to notice here isn't just that high number. It's the speed. The sheer velocity of that rise and fall tells you there are some incredibly powerful forces at play. So what gives? This chaos has basically created a fascinating mystery, and there are two very different sides to the story. One narrative says we're in a super boom, all based on real-world fundamentals. The other says it's a bust, driven entirely by the financial markets. So let's play detective and look at the clues, starting with the case for a silver boom. Right. The argument for silver going to the moon is incredibly strong, and it's all built on this perfect storm of supply getting tighter and demand just exploding. And this isn't just about investors, this is about industry. So the pressure really started to ramp up in late 2025. First, the US government officially called silver a critical mineral. That's a huge signal about how important it is. Then, just 2 months later, bam, a massive supply shock. China, which produces a ton of the world's silver, just completely banned all exports. They wanted to keep it for themselves. And get this, those supply shocks hit a market that was already stretched thin. This number, 6, is so important. For 6 years in a row, the world has been using more silver than we've been able to mine. We are already in a deficit, and that squeeze is just getting worse. So where is all this silver actually going? Well, as you can see, it's not just for jewelry anymore. It's now absolutely essential for green tech. I mean, solar panel manufacturing alone is on a pace to eat up most of the known silver reserves by 2050. And check this out. The new solid-state batteries for electric cars, they need almost a full kilogram of silver for every single car. So the big takeaway from the bulls is this. Silver's job in the world has fundamentally changed. This isn't your grandmother's silverware anymore. It's become a strategic, absolutely irreplaceable industrial commodity. But here's the twist in our story. I mean, if the industrial case is so airtight, why in the world did the price crash by nearly half? To figure that out, we have to flip the script and look at the other side of this investigation. That industrial story is compelling, for sure. But silver doesn't trade in a vacuum. It's also a financial asset, and it's been getting hammered by some powerful economic forces that have absolutely nothing to do with solar panels. First up, a stronger US dollar just makes commodities like silver more expensive for anyone buying with a different currency. Then on top of that, you've got these stubborn inflation fears that are making central banks really nervous about cutting interest rates. And when interest rates are higher, holding something like a precious metal, which doesn't pay you any interest, starts to look a lot less attractive to investors. And this really gets us to the heart of the conflict. It's like silver has this split personality. Its identity as a critical industrial metal is pulling the price one way, but its identity as a financial asset is yanking it in the complete opposite direction. So how do you make sense of that? Well, a lot of investors turn to a classic indicator. To try and navigate all this confusion, many analysts look at how silver is priced compared to its more famous and, frankly, more stable cousin, gold. And they do that using the gold-silver ratio. It's actually a pretty simple but powerful metric. All it asks is, how many ounces of silver does it take to buy 1 single ounce of gold? You can kind of think of it as a mood ring for the market. When the ratio is low, it means silver is hot. When the ratio is high, it means investors are getting scared and running to the perceived safety of gold. And this chart just lays it all out for us. You can see, back in January, when silver was peaking, the ratio dropped down to around 40. Silver was the star of the show. Today, it's back in that more typical mid-60s range. But look at that last line. History shows us that during big economic crises, this ratio can spike way up, over 100 even, as investors flee from silver's industrial volatility and run for gold's safety. So, after looking at all the clues, where does this investigation leave us? Well, the mystery of silver's wild ride isn't about one side being right and the other being wrong. It's about two powerful, totally legitimate forces pulling in opposite directions. It's literally a massive tug-of-war. On one side of the rope, you have the long-term, incredibly powerful force of an industrial revolution that is demanding more and more silver for green energy. And pulling back just as hard on the other side are all these short-term pressures, a strong dollar, investor fear, and the cold, hard realities of the financial markets. So the thing you have to understand is that this volatility, it isn't just random noise. It's the direct result of these two giant stories clashing with each other out in the open market. And that's what's creating the wild ride we saw in those price charts. And all of this leaves us with the final, critical, multi-billion-dollar question. In the long run, which force is going to win? Will the undeniable physics of industrial demand eventually overpower the day-to-day psychology of the financial markets? The answer to that is going to define the future of this critical, and for now, deeply conflicted metal.